XRP emergency risk is back on the table as markets digest two converging stories: the start of creditor distributions from FTX and the rising probability of a U.S. government shutdown by Friday. Both events can move liquidity quickly and amplify volatility across digital assets. We will break down what is happening, why price action looks choppy despite headline inflows, and what to watch over the next 72 hours. Let's start with the market. XRP pulled back modestly after testing the 2.90 to 2.91 area yesterday, and now trades near 2.85, a decline of roughly 0.6 to 1%. The move is not isolated. Broader crypto remains uncertain, with weakness extending to peers such as Hedera and Stellar as participants reposition ahead of month-end and a heavy macro calendar. This is happening even as reports indicate that roughly $110 billion in market value was added across crypto in the prior session. The apparent contradiction, green one day, red the next, is exactly what you see when flows are large but direction is contested. The catalyst today is FTX. Creditor distributions are beginning, with a first wave of roughly $5 billion slated for payouts. Two paths are possible. Scenario 1, bullish. A meaningful share of recipients keep funds in the ecosystem, rotate into majors, or redeploy into altcoins, supporting market depth and reducing sell pressure. Scenario 2, bearish. Recipients convert to cash, withdraw to the banking system, and reduce on-exchange liquidity, creating a net outflow precisely when books are thin. Which scenario dominates will determine whether this is a classic sell the news event or the opening bid for a stronger fourth quarter. Early price action suggests mixed behavior. Some recycling back into crypto, some profit-taking, and some pure de-risking. Mid-video call to action. Tell us in the comments which outcome you expect from the FTX distributions, net inflow or net outflow, and which indicators you want us to track in real time. If you want a dedicated segment on-chain traces of these transfers, say FTX flows, and we will build that for the next update. Now to the headline risk that can overshadow everything: a potential U.S. government shutdown by Friday. If funding is not approved, core statistical agencies have warned that scheduled economic releases would be delayed, including Friday's jobs report. Markets trade expectations, not just outcomes. When visibility on macro data falls, risk premia rise and liquidity providers widen spreads. In crypto, where leverage is high and order books can thin quickly, that can translate into sharp, mechanical liquidations. A shutdown does not guarantee a crash, but it increases the probability of disorderly moves, particularly around weekend trading when traditional liquidity is lower. If you're managing risk, build scenarios for both outcomes and know your invalidation levels. Layered on top of these macro and flow dynamics is a regulatory development that could become a bigger story in October. The U.S. Securities and Exchange Commission recently advanced generic listing standards for crypto exchange-traded products and asked issuers to withdraw and resubmit certain filings under a streamlined framework. The review clock under this approach is significantly shorter, measured in days, not months, once the refilings are live. Practically, that means exchange-traded products tied to large-cap digital assets could receive decisions far faster than investors are used to. For XRP, where expectations have been centered on mid to late October, the timing could pull forward if issuers move quickly and meet the updated criteria. It is not a promise of approval, but the pathway is clearer and the timeline, once triggered, is compressed. Putting these threads together clarifies today's price action. On the one hand, you have headline inflows and the prospect of faster institutional access through exchange-traded products. On the other, you have uncertainty around how much FTX capital actually remains in crypto and a looming policy shock from Washington that could freeze data and unsettle risk-taking. The result is a tape that hesitates at resistance, sells rallies sooner than momentum traders expect, and then snaps back when order books refill. In short, a market that demands patience, preparation, and discipline. For XRP specifically, the focus should be on three dashboards over the next few sessions. First, spot and derivatives liquidity. Watch depth on major pairs, funding rates, and open interest around round numbers. If funding compresses while open interest climbs and price holds above recent higher lows, that is constructive. Second, on-chain exchange flows. Large net outflows from exchanges can signal accumulation. Large net inflows warn of supply overhang. Third, cross-asset context. If Bitcoin holds bid on macro jitters while altcoin breadth fades, XRP will likely trade in the slipstream of that rotation. A note on seasonality. We are closing September, historically a challenging month marked by tax-related selling and portfolio rebalancing. October, by contrast, is often kinder to crypto, with renewed risk appetite and fresh capital allocations into year-end. Seasonality is not a trading system, but it is a backdrop. Combine that with an accelerated ETF timeline, and you have a plausible case for stronger fourth-quarter narratives, provided the macro environment does not deteriorate and provided that large distribution events like FTX do not siphon too much liquidity out of the system. Let's pivot to industry positioning. Swift's annual SIBO's conference this week underscores the structural shift toward real-time, always-on payments under ISO 20022. Hedera, Quant, and XDC all had a presence this year, reflecting the multi-chain reality banks are exploring. The absence of a given network from a single event does not determine its role in the future. It often reflects conference programming, commercial timing, or simply who is ready to showcase live integrations on that stage. XRP's thesis remains rooted in liquidity, FX, and high-throughput settlement with bank connectivity built over years. Those strengths do not evaporate because another chain featured in a panel. In fact, the direction of travel, tokenization at scale, interoperable messaging, and 24/7 treasury tends to expand the opportunity set for networks that can deliver predictable performance with compliance baked in. Back to the immediate trading window. If a shutdown is avoided and Friday's labor data prints on time, volatility could compress and risk assets may attempt a relief rally into the first week of October. If a shutdown proceeds, expect headline whipsaws, rumors around ETF timelines, and a premium on pristine collateral within crypto. In both cases, the key is to avoid overreacting to the first move. Distribution events and policy headlines often produce an initial spike that reverses as positioning resets. Let the data confirm the direction. Higher lows with rising spot volumes and stable funding are the tell for trend continuation. Lower highs on declining volume argue for patience. Here is your action plan. First, size positions such that a 2 to 3% intraday swing in XRP does not force you to exit at the worst moment. Second, decide today whether your strategy is event-driven or trend-driven. Do not switch mid-trade. Third, write down the conditions under which you would add, reduce, or exit and stick to them. Finally, keep a close eye on exchange risk. Distribution days attract opportunistic behavior, and counterparty safety is part of portfolio safety. Tell us whether you want a focus segment on shutdown risk modeling specific to crypto, including a simple checklist for how to navigate data blackouts, futures basis, and weekend gaps. If you want that, comment Shutdown Playbook. If you want an explainer on the updated ETF filing mechanics and what a compressed review clock means step by step, comment ETF timer. To close, today is about separating signal from noise. FTX creditor distributions are a real flow that can either recycle into the market or drain it. A government shutdown is a real risk that can either be a non-event or a volatility shock. The SEC's streamlined pathway for exchange-traded products is a real structural change that can unlock faster institutional access. And through all of this, XRP's story remains tied to liquidity, reliability, and integration with the financial system. Manage risk, respect the calendar, and let the next 48 to 72 hours reveal where capital truly wants to go. We'll be here tracking it with you.